Hey, everybody. Welcome to the morning market briefing. It's Thursday, July 9th, 2026. Got the two Toms in the house. Thomas,
We're back.
how we doing?
Free KTK.
We got him.
Freaky Tiki back.
Freaky tiki. I like it. Tom, how we feeling?
I feel great. Things are a little volatile
Little
right
dicey?
now, but
Yeah, let's jump
know.
into the diciness. The war escalated pretty quickly. We were on the call yesterday. Seemed like the ceasefire was clearly done. Seemed like it was back to the square one, so to speak. But 90 Iranian military targets hit with missiles. Iran now responding by hitting with drone strikes some U.S. bases in Kuwait and Bahrain. This thing's heating up quick. So
We're back.
Back like we never left, back like we never started. What's been interesting to me, Thomas, is oil actually cooled off a little bit.
A little bit this morning, honestly. I think by the time it might have already gotten back up to 80, but it sold back down to 76 this morning after I think it was up like 7% yesterday to $80 a barrel. But a quick pullback, but I think that
I mean, it kind of faded intraday too.
Yeah.
I mean, at first it was like oil was the only thing up, and it kind of everything sort of met in the middle to finish. I feel like tech was way down, and then kind of came back to being not down that much. Oil was up, and then it kind of came back to being not up that much. It was a weird mix yesterday.
It was a weird day, and it also felt like as things were escalating. Again, I think there's probably an element of war fatigue, but it didn't dominate the headlines. Even just walking through the kitchen, seeing what was on Bloomberg TV, like it wasn't just war. So kind of interesting, especially given the cadence at which we're seeing some escalation. Tom, what are we seeing in fixed income world? I imagine rates are moving.
Yeah, so rates sold off really hard starting Tuesday afternoon, sort of settled yesterday, and then we've kind of flattened off. They're actually up a little bit from where they finished the day yesterday, but 10 years off, bumping up against 460, 30 years back to like a 507, 508-ish level. So we kind of returned exactly where we were prior to the ceasefire. It's interesting to me that paired with the Fed minutes we got yesterday, and we'll have a whole segment on that, plus the fact that oil really has not jumped, that we've seen such a jump up in rates. I think it's an opportunistic time again. I mean, this is really the upper bound we've seen, really going all the way back to when inflation was 9, and so I think you'd be hard pressed to see it get that to that level and necessitate much higher rates, particularly on the long end. But I mean,
it kind of seems like we have a window that maybe we thought had already closed at this level.
And so I mean, we'll continue to be opportunistic. We already have plenty of exposure on the long end. Last couple of weeks, we saw the front end of the curve really come up relative to the long end, and so we were really buying twos and threes and 4-year treasuries, sort of mid-range corporates, so as not to step in front of a potential pullback like we have had. So now the idea is, if a client needs a little bit longer duration, then the opportunity is there again. But man, I struggle to see a scenario where we still don't have inflation coming down towards the back half of the year.
Yep.
I just struggle to see it.
The less talked about war, at least in this moment, Russia, Ukraine, also having an impact on energy prices. Ukraine targeted specifically kind of some diesel production facilities, and Russia has now banned the export of diesel until the end of the month. We saw a pretty sharp reaction here on U.S. diesel prices going up 13%, London wholesale futures surging 14%. So we got two wars, both impacting energy. So something we got to fight through. But we did get, Tom, you alluded to it, the Fed minutes. I think we set the over-under on word count at 5,500.
And it was under.
And it was under. Give us your overall impression, formatting, style, length, commentary.
It was totally different, which I thought might happen, but I was sort of the opinion that they might just do an abbreviated version of the old ways. But we got normal formatting. We got regular paragraphs that went all the way across the page. We didn't get the weird news style 4 columns across. I read through the whole thing, and the reaction, I think, was over indexed to the idea that they were hawkish here. I mean, a lot of the text was around the idea that Yes, inflation had ticked up. Yes, the war in Iran was causing short-term bump up in temporary inflation. There's a lot of talk about the idea that AI demand was also pushing inflation. And if you did just a quick, control F, the word hike came in 3 times, the word cut came in once. But if you look around the paragraphs within those within which those words were contained, there's a lot of, hey, if this thing is persistent, if we continue to see inflation at high levels due to AI demand or due to the war in Iran, that it may facilitate a hike. But if you go around the word cut, it basically was like the base case is that they can leave rates where they are. And if we see inflation come back down at the back half of the year, it would probably be a scenario where the Fed will need to cut in early 2027. So I think that's actually the most important single sentence in the whole thing. That
so maybe not like weighted probabilistically, but more if things are status quo, we should be looking at a cut.
Yeah, and so if you look now, the odds that we'll get a hike in January or really closer to December are still priced in the market as a hike. But if you look at what the Fed actually said is that, yeah, sure, if things persist and we see runaway inflation, then we will hike. But our base case is that we're actually going to cut. And so I think that that's something to be really aware of, that they're telling you what the base case is. So now if you think of that probabilistically, I would still have the concept that they will cut rates or could cut rates as a high level of probability in the curve there. Even if it's 33% across the board of nothing, hike, or cut is still an equal measure, I would say. And I would still be of the opinion that there's a possibility we get a cut this year. I don't think that that's impossible. In fact, I think it's much higher probability than people are giving it credit for. I mean, I think that the futures market is off by quite a bit, but in the meantime, we're going to take advantage of artificially high rates, and you can buy anything across the board with real rate power, so above and beyond inflation where it is right now, and a lot if it comes down. So that's where I stand on that. But I'm very much in favor of the new format. I think it brings me back to what I used to cold call for the bond desk, which is that the coaching was always crisp, clean, and no caffeine. There's not a lot of fluff. It's just
in and out.
You're going to make 100 calls a day. There's no sense in dilly-dallying. So.
Yeah. Crisp, clean, no caffeine, TK. SK Hynix.
Coming to America.
7 times oversubscribed. This is about to be pretty massive. Second largest international IPO on the U.S. index. Second only to Alibaba.
I know, and it's like right
but
behind.
Barely. It seems like you would try to juice it and get above that.
I know. They're spending like $500 billion on new facilities. You might as well take it up $500 million.
Yeah. So they're going to raise $24.5 billion. The record was $25 billion. Yeah, I don't know why you're not. I mean, I feel like
go for it.
Get that trophy. What's the date on that?
I'm not actually sure. I think it's coming later this month, but I don't know. It's just going to be continued additive supply, where equity raises. I think this is something that maybe OpenAI was afraid of too, why they delayed their IPO. I mean, you're going to have some of these memory companies internationally come in and adding further supply. That
certainly seems like good timing by SK Hynix given the hype.
Yeah, well, I don't know. They've been getting...
Maybe should have done it 2 weeks ago.
Yeah, 2 weeks ago. Maybe,
a month ago would have been even better.
Yeah. NVIDIA in China looks like China's planning to allow H200 chips.
Yeah, so the H200 chips are many, many generations back from where these frontier data centers in the United States are getting. But GPUs that NVIDIA provides... Obviously, some are more power efficient in the newer models, but they are all very good for training. So previously, Trump had allowed these chips to be shipped to Beijing, but Beijing wanted to give hadn't given their local companies like Alibaba, DeepSeek, and things like that, their AI labs, haven't allowed them to purchase them. But due to the increased demand for all these Chinese models, I think the Huawei chips that they're providing these different companies aren't actually able to meet that training demand. And Hicks, I put in a graph. I'm not sure if it worked. Oh, look at that. So the demand for the lower cost Chinese models is growing significantly. Friend of the firm, Torsten Slock, put out a couple graphs this morning talking about the shift away from some of the U.S. models and especially a lot of the European models over to the Chinese models because they're a lot cheaper. These companies are open source, which means that not that you're getting them for free, but you're not paying that monthly subscription and that per token usage as much as you would be with a Claude or an OpenAI subscription. So market share is shifting a lot to the lower base of models, I think, for a lot of smaller companies, less the enterprises. And that is also seen in them getting those NVIDIA GPUs to meet the demand for the new models.
Good you know where there's been a real drop in demand for Chinese models is Congress once Eric Swalwell got
Yeah.
People forget.
Nobody's talking about that anymore.
Got in trouble for...
what a story. What was her name? Fang Fang?
I was just trying to Google it. I was like...
It's Fang Fang.
I was going to say Mew Mew.
Fang Fang, Fang Fang. And for what it's worth, I'm not being insensitive with the pronunciation. I don't remember what it was. And if I did, I'd probably be intentionally insensitive, but I don't.
Well, she operated under the name Christine Fang, but her actual given name was Fang Fang.
Okay.
Oh, Christine Fang. Was Fang... so given name was Fang Fang.
Yeah.
So probably on LinkedIn, it's like Fang, Christine.
Yeah,
Fang.
it's Representative Eric Swalwell's connection to a suspected Chinese intelligence operative involves Christine Fang, which is in bold and then parentheses, also known as Fang Fang.
Love it. Costco reporting pretty strong monthly sales, TK.
Yeah, pretty strong monthly sales. They sold off a little bit this morning, but I think that's mostly with a lot of the staples selling off this morning. But driven heavily by high gas prices. The total was +8.8 on sales, and then +7 for ex-gas. And then in the United States, +10.6 on sales and +7.6 in gas. So even without the gas price increases, I think they're up
solid.
like 22% this year. Still pretty solid growth.
Announcing a quarterly dividend.
Big dividend out of Costco. No, they're announcing a quarterly dividend for about $1.47 a share. And, for context, the stock is $953. So I think it's like maybe less than 1% annual dividend. So kind of a nothing burger there.
But we got it. We got a dividend nonetheless. Pepsi reaffirming its full year guidance. Nothing incredibly noteworthy, I didn't think. Did you?
Yeah, I didn't think it was very good.
Yeah, stock's down a little bit.
So for context, Pepsi's plan the past couple months had been this low. We're going to drive volume through cutting costs because no one wants to spend $8 for a bag of chips. Recently, they did go back on that, increase their prices a little bit. But what I was really concerned about is the fact that you have this World Cup, so their quarter goes up to the 13th. So not the full aspect of the World Cup, but I mean, you're seeing flat volume year over year on negative growth the last second quarter with the World Cup, with these price decreases. That is a little bit concerning for me.
Yeah, that's not great. Do you think the peptides are eating into it, Tom?
Oh, yeah.
People just injecting themselves and saying, you know what? I don't need chips.
I'm done with chips.
Yeah. I also, and here's a question, and this might be, this might come across as elitist, but at what age are you too old to be eating a lot of Doritos?
Certainly now.
22.
Yeah, I feel like there's a cutoff where you're like, I'm a big Doritos guy.
If there's Doritos, often happens, cookout setting, people bring chips, there's a bag of Doritos. I would say I average 3 Doritos, like 3 chips.
It's one of those things where it's like, if you're going hard at just like big bags of Doritos.
What are we doing?
Yeah.
Look yourself in the mirror and ask yourself, not even why, but how did I get here?
Yeah, I mean, like, I would argue that, one, I don't know what they're made of, but two, like, you got to graduate to chips and salsa at a certain point. You know what I mean?
Yeah.
If you're gonna be going the nacho flavored triangle,
just make nachos.
Chip. Yeah, exactly.
Just make some nachos. All right, good stuff. We'll wrap it up there. You guys have a great day. Talk to you tomorrow.